54.7%. That's how much gold shot up in 2025, with over 50 all-time highs. But in January 2026, it went to a whole new level. So let's break down what's fueling this surge. Here are 3 key reasons. The first key factor is that central banks are buying enormous quantities of gold. Imagine buying a big cube of gold, with each side at 1.5 meters long. That equates to about 60 tons of gold. Now, central banks are predicted to buy 60 metric tons of gold every single month throughout 2026, according to analysts from Goldman Sachs. Poland's central bank is predicted to go from 550 metric tons to 700 tons this year. Meanwhile, China is on a buying roll and have purchased more and more gold for the past 14 months. The result is that now many central banks throughout the world own several thousand tons of gold. So why are they turning to gold? They're moving away from the US dollar. They're seeing themselves as being over-reliant on the currency and at the mercy of its foreign policy. The second key factor is that the world is uncertain right now. Gold is primarily seen as a safe haven asset that people turn to in times of uncertainty. As a result, when there is economic or political turmoil, gold historically increases in value. There is escalating tension across the world, from Ukraine to Gaza, from Iran to Korea, and from Greenland to the BRICS nations. So in times like these, people tend to turn towards gold. In 2007, with the US mortgage crisis, gold went up 29%. In 2016, with the Brexit vote and Trump getting elected president, gold went up 30%. In 2020, when COVID struck, gold went up 20%. And in 2025, with huge global political uncertainty, gold has gone up 54%. Of course, we all know that nothing goes up in a straight line. Gold has gone up in 18 of the past 21 years, but down in 3. So the key question you have to ask yourself is, do I think I can predict the future? And if you can't, that's one reason to turn to gold. The third key reason is that it's a hedge against inflation. We're all sick of the cost of our weekly shop going constantly up, and that's inflation. In December 2025, the UK inflation rate was 3.4%, up from 3.2% in November. Meanwhile, food inflation is at 4.5%. So clearly, keeping wealth in pounds and pence over time diminishes its value. If you have £1,000 today, you'll still have £1,000 in 10, 20 years' time, but what it can buy will be significantly less. So people are combating this by choosing to protect their wealth with gold. The traditional way of looking at this is that in Roman times, an ounce of gold could buy you a suit of armour. Now, an ounce of gold could buy you a tailored suit from Savile Row. So you can see that the buying power of gold hasn't really changed. What has changed is the amount of currency, pounds and pence, that it takes to buy it. So as inflation eats away at pounds and pence, it takes more of it to buy gold. Remember to subscribe to our channel so that you can stay up to date with everything to do with gold and how you can protect your wealth. We've covered a lot of information here, and you can get some fascinating insights from our guide to tax-free gold. It's packed with information you won't find anywhere else. Simply go to our website directbullion.com to get your copy today. The purchase of gold from Direct Bullion does not constitute an investment or offer financial returns. Gold is considered a store of value and not an investment product. Past performance of gold is not indicative of future performance. Prices and values of precious metals can fluctuate and are influenced by various market factors. Direct Bullion does not provide investment or tax advice and recommends that you conduct your independent research before making any purchasing decisions.